Hello, 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 and welcome to your Behind the Market special today. Today we will be joining you. I am joining you alone here live on the show. Unfortunately, we do not have Vernon with us, but he will be joining us a little bit later. But a good morning to everyone on Behind the Markets as we're on the Futuristic Friday edition. Today's show will be covering some of the big news, big deal done. We'll be going through some market data while we will also be heading towards the story today or the topic of discussion, the future of green energy in Africa. And this is obviously of the discussions that were happening at the Bloomberg New Economy Africa Gateway Summit. We'll be covering some of those discussions. There are about six or so, and we'll be covering them over the next couple of weeks so that we can have a futuristic outlook of Africa. And thanks to the people at the Bloomberg Economy Summit. Thank you everyone for joining us today. Hope you're having a wonderful day. Please give us your name, where you are joining us from, tag a friend, and tell them it is time for Behind the Markets and it is time to get your daily dose of your economic updates. But to get kick started today, we will be, and as I said, shout me where you're joining us from. Give us your name and where you're joining us from. And to kickstart off today on Futuristic Friday, we'll be starting off with the market roundup. And on the market roundup today, we have seen that we did see the Kwacha continuously gain a little bit of strength, but unfortunately, we are starting to see it curve backwards a little bit. If you're looking at the Kwacha versus where it was supposedly trying to end or where it kicked off, you did see that it started to get a little bit of momentum heading towards depreciating a little bit. But I think obviously the news that came in yesterday will start to reverse course on that. So we haven't seen that affect the bond auctions yet, but we are starting to see a nosedive in the market for remittance. So in the Kwacha market for remittance, opening the market today, we have seen that the FX rate has taken a nosedive down to about 17.12. So it's opening much lower than it was. It closed yesterday at about 17.72. Yesterday, because it did bump up in the overnight trading range, was 17.43. It closed in the regular hours, and overnight during the midnight hours we saw it at 17.76. But now it has nosedived all the way to 17.12. So we are expecting the market to open with a stronger Kwacha. So we are expecting the market to open with a stronger Kwacha because indicators from indicators from the remittance market Kwacha is actually showing that. So let me just quickly dive into my terminal where I'm actually checking this out from, so that I can actually show all of you to show you that there has been a little bit of, as I said, the jump down in the trading ranges of the market. Now, as I said, obviously this is coming off the heels of news that we're getting from the this is coming off the heels of news that we're getting of a debt restructuring deal. So if you take a look here on the 12-hour trading range, which you've gotten, this is your Kwacha versus your US dollar. And as you can see, throughout yesterday, it was trading at about 17.4 in the remittance market. Now, when you're closing out the remittance, now we saw it overnight start to trend upwards to about 17.8. But obviously, when news came in of deal done, we did see it open with a huge nosedive down to 17.12. This is the lowest that it has been seen for some time. Whether you're going back months, whether you're going back days, this is a very low point for the dollar versus the Kwacha. So we are seeing already momentum in the early morning hours that we are seeing dollars flooding in at a cheaper rate or trading at a cheaper rate. So there should be flows coming in, especially with the limitations to offshore investors from participating directly in bond auctions. They have to now deal directly with banks. It's going to give banks a lot more dollars to work with on the markets, and an excess flow of dollars to be working with. So as we're seeing, the Kwacha did move upwards a little bit towards the end of the day, but obviously when the news of deal done came out and the news started to come out, started to flow out, we're actually now seeing that we're seeing a Kwacha that's probably going to open a little bit lower than where it is. We'll wait to see what that effects will have on the mainstream market, but the remittance market is already showing cheaper Kwachas flowing into the market. The Kwacha is the dollar. The dollar is already looking a little bit on the oversold side. But then again, that's initial reactions. There's a lot of volatility sitting in our forex market right now, and that's a sign of a very stressed economy. Now, looking at the Lucid All Share Index yesterday, it did continue to stay flat where it was 0.2% up on the week, 1% up on 30 days, and 12.25% up year to date. While bonds were up 0.06%, no signs that the auctions did change anything. And the US dollar index was down 0.27% from yesterday, with interest rates moving only slightly negative, not something that is highly visible to the eye. Now, and a welcome to as many of you as possible who are joining me now. Taking a look at where our charts are sitting, we are seeing that the US dollar is down 3.25% year to date, and down 8.9% just on the month. So this is why I said holding dollars is a very dangerous game at this moment. So it's probably wise to start offloading as quickly as possible for as many people, just for the interim, or trying to hold your dollars for specifically investment purposes. This is where you were supposed to have cut and run, because once that first news started to come out, there's a potential deal. This is where it started to get very hazardous for as many people as possible. Now, what we're also looking at here is also the rand is down 1.1% yesterday, and down 11.71% year to date. So this is probably a little bit of good news for cross-border traders, though there is a little bit of news that they've been complaining about the level of volatility in the currency and how that's affecting their planning. But we are seeing a very positive rally happening in the kwacha for now, though I don't think this is going to be the main part of the kwacha rally. I think the kwacha strength story is still scheduled for about 2024 going onwards. Now, bonds yesterday did move in the regular manner in terms of the GRZ bond index in Zambian kwacha, up 0.6% year to date, and it was up 12.9% year to date and up 0.06% yesterday, but down 0.27% when it comes to in dollars. But in dollars year to date, up 17.06%. It appears the dollar trader has actually benefited more than the Zambian one. And we saw that the interest rates went down 0.002%. And we started to see it's still above where the lowest point is, and year to date it's still up 0.44%. So we're still seeing movements of interest rates there. Now, in the commodity space, we did see that copper was down 0.23% and oil dropped about 3.92% on negative news that's actually coming in of worries of oversupply and demand issues. But we also did see gold drop 0.76%. So across the board, Fed hiking fears and also central bank hiking fears also pushed up interest rates. 2.5% year-to-date growth in copper, but the rest of the commodities are down negative, with gold also up 5.1. Oil is down negative year to date. Cryptocurrency was up 0.5% yesterday, mainly because of the rise of Bitcoin back up above 30,000 for the first time since April. That was news that actually pushed it up. We'll cover that as well. And that's also mainly due to the rise of ETF applications. Bitcoin up year to date 75.23%, while we're seeing Ethereum up 52.04% year to date, up 1.9% yesterday. Remember, crypto assets are very, very volatile. So play that market very carefully. Gold was down 0.9% year to date, mainly because of the strong mainly because of the strong kwacha plus the weakness in the gold market itself. Gold is on a 4-day losing streak in dollars, plus the kwacha is on a winning streak. So that combination is allowing the gold portfolio to play poorly. Gold up year to date 2.08% in kwacha. So wealth insurance assets, it's mainly the crypto space that's actually holding it straight. So if you're looking at all our markets altogether in terms of as of yesterday, we did see that bonds are up 12.9%. Year to date, stocks up 12.3% year to date, while you see USD down 3.3% year to date, 2.1% gold year to date, and the red bars are signaling adjusted for inflation. Cryptocurrency up 75.2, and Bitcoin up 75.2, and Ethereum up 52%. Now, remember, as I always say, gold, USD, Bitcoin, Ethereum, these are wildly volatile assets to be making up the large composition of your portfolio. So should you just follow these rates of return and not be looking at how much and what level of risk you are partaking of, you are endangering yourself. So this is where the market stands as of now. We're actually looking at where we are in terms of our four horsemen. Finally, as the final cut of this point, we did see that U.S. crude inventories dropped 3.8 million barrels. That should have pushed oil up, but hiking fears are the worst part of it, and recession fears are the worst part of it. Mexico and Egypt did hold their interest rates. However, Switzerland rose its interest rate by 0.25%. Bank of England did a surprise rate hike of 50 basis points as opposed to the 25 basis points everyone was expecting. And Turkey raised its interest rate by 6.5% to 15%. We also saw that U.S. jobless claims hit a new high and they rose again. And EU consumer confidence is still in the negative position. However, in the good side of things, US existing home sales rose to 4.3 million. You knew us at existing home sales, so that's good news for the property market, that there's still that appetite for the acquisition of property even with higher interest rates. So that means that, obviously, remember that construction is one of the key customers of copper for the Zambian story. And that is our main headlines. So that is our main. Those were our main data points as of yesterday. Strong kwacha, commodities market all in the week. While we're seeing flatness in our bond market and in our stock market, it's mainly the FX that's going to telegraph which direction this is going to go. Now, let's take a look into our deep dive. And deep dive story number one: deal done. And this has been the biggest story, I think, that's been circulating from yesterday. Obviously, they've been main stories, but we haven't had our main conferences on it. But deal done. Zambia seals $3.3 billion debt restructuring deal. Now, this is obviously on our bilateral debt, and this is also what's going to unlock the $188 million from the IMF. So this is an in-principle agreement that has been made by our bilateral creditors to basically say public sector creditors have agreed to reschedule 6.3 billion, and private sector creditors are expected to do the same. Zambia's debt is rescheduled over more than 20 years, with 3 grace periods during only which interest on which only payments on interest are due. So principal payments will be held back. So this was basically China trying to come in as of yesterday to also now try and clean up what was happening, because they were also getting a lot of a bad reputation in all of this, and were basically caught in the middle of the guerrilla fight that was happening between China and America. That was basically slowing down our probability of getting a good deal. Now, here's the main thing I will say to everyone. Now, this is just step one. Now, it does mean that it is very positive. This was the biggest hurdle. Okay, I think what everyone needs to bear in mind is this was the biggest hurdle. Okay, and it was the biggest thing that was holding back a lot of progress. So once this is done, the rest is just procedure. Now, apparently, due to the conversations that are being had, the private sector creditors are a bit more comfortable now with trying to restructure this, because their main concern was they didn't want to give debt relief to Zambia, or debt restructuring to Zambia, only for that money to be ending up in China. That was the main thing. While the Chinese are also saying, hold on, we don't want to be giving debt relief to you, so that that money can end up in American hands. So how can we try and fix this? Because you have to remember that a lot of African countries were looking at Zambia's model, and they're going to replicate it. So for China, this is effectively what's going to be replicated across the rest of their $170 billion Africa portfolio, and also across our countries like Pakistan, Sri Lanka, countries that are in extreme stress right now. They have been looking for how this deal was going to go through, and they're going to look at the terms and conditions that are rolling out in this deal, and they're going to expect them to roll into their deals. So this is why this one took so long, because it was the test case of how China and the Western world could come to the table in a mixture of bilateral credit and also private sector credit and securitized debt. So direct project loans, securitized debt, bilateral, east versus west. So many dynamics were playing out in this debt, so that the rest of the world now, countries who have much bigger debt than Zambia, are now looking and saying, right, now that the model has been set, can we start having that replicated here? So you'll see a lot more countries across the continent and across the developing world getting deals faster now, because they're just going to look at, and this is, like I said, this is why China took their time on this one. They took their time agreeing to this because they knew that it would have cascading effects across their whole debt portfolio. Now, remember that this isn't China's biggest debt problem, but it's a significant one. Their Belt and Road debts have been going into a lot of problems, and they do expect IMF support in as much of their Belt and Road debts. And this is why they're coming into it. And also because the problem they were facing as well as a country also is also internally. They've got a huge problem in their property sector, and then they've got an even bigger problem in their local government sector. They've got about $1 trillion of debt sitting in their local government sector and $600 billion worth of debt in their property sector. And then they got these Belt and Road loans, which have actually started to go pretty bad. So they've got a huge debt portfolio problem happening in China. So they're looking to try and relieve it as much as possible. But they're also still heated competition with America and the rest of the Western world. So what this also signifies is also the reduced, how do I say, influence of America in these negotiations. The fact that President Macron basically had to take these over. And he's showing that now Europe is having more of a say than just directly America. Though America obviously has had their say in this, it looks like it was Europe that ended up pushing the end of the day, and France was leading the conversation there, especially with this new finance pact. So there is a deeper conversation happening as we look at it now. And there are your feelings on all of this. So I'm going to talk about what this means to as many of us as possible and how we should deal with this. But I do see one comment here, and I will read it out. Kasonde Katongo has said, as Zambians, we should do better. It took FTJ more so than Wanawasa to eliminate our debt. Less than 10 years later, in debt 3 times more than we were before, with nothing to show for it. Well, I mean, yeah, it's true. I mean, it is unfortunate that, but this is also the downside of the relief situation. But we should actually do better with this opportunity. So I'm going to explain something to as many of you as possible. This is going to be an emotional conversation driven mainly by the political class, and there's going to be a lot of political lobbying back and forth as to what this means. I'm going to try and explain this to you from a financial perspective and from an economic perspective as to what this means for you, not what this means for the egos of the people who want to either stay in power, want to get voted in or voted out, whatever is going to happen. I'm looking at you and your well being and what this means for you. So once you get into a debt restructuring process, and this is why you're starting to see the rallies in your forex, and this is no longer the central bank intervening. This is actual money coming into your economy because people now want to buy up your securities. Okay. Now the reason, now remember that they've only capped offshore investors from auctions, not from secondary markets. So what can happen is that governments can actually sell off, so banks can actually sell off a lot of GRZ bonds coming in. And welcome to our colleague here from Mozambique. But governments can actually sell off a lot of GRZ securities in order to, sorry, banks can actually sell off a lot of government securities in order to free up capital that they can now start throwing into the lending markets, because they actually are under pressure to start becoming more active members of the growth story of this country and also supportive of lending to the business community of this country. So that's part of the conversation we're looking at here, especially because they are the recipients of a lower tax rate. Remember, the taxes have come down from 35 to 30%, and that's benefited banks, by the way, who are currently sitting at record levels of profit. Q1 profits in the banking sector are up about 20% again versus where they were last year. So we are seeing record levels, and we're on track for a record level of profit in the banking sector just this year alone again. Last year, we experienced 5 billion kwacha worth of banking profits. We're probably going to see it again. Now, let's take a look at where this is taking us as a country in terms of what direction you should be looking at. I said before that whenever we have these debt reliefs, it creates massive wealth expansion in this country. Massive wealth expansion. But it only goes to the people who are actively engaged in the economy. I'm going to repeat this. It only goes to the people who are actively engaged in the economy. I'm talking about people who invest their savings in markets. I'm talking about entrepreneurs who have built companies who are now going to be the recipient of the tide rising. The tide will only pick up the people who are active. The people who are passive and making noise and who are just chitter-chattering and just involved in this honorable, that honorable, comment this, that is not going to get them anywhere. So you have a choice. I said this earlier, I said Zambia is on the cusp of the greatest wealth expansion in its history. The reason I say this is with debt clear, because this was the overhang. It now unleashes the economic growth story. And this is why I say so. There are some factors at play here. After 2025, we're going to see the copper price rally extremely powerfully. Like we're probably going to see record levels of copper prices going from about ranging, and these are the estimates, from about 11 to about 15,000. These are the researched estimates by the main US investment banks. And they've said that mainly because EV demands, electric vehicles are expected to hit 27 million to about 30 million by the year 2027. Electric vehicles are growing at about 60% a year, mainly due to the growth in BDY and the growth in Tesla. These are the key drivers of electric vehicle demand, plus the green transition. In other words, countries are investing heavily. So copper demand is up. Smelter capacity, I told you, in China, Indonesia, India, smelter capacity is also going to grow as well, while we're having South American socialism problems, which is actually slowing down the output of copper. So you've got slowed down copper output, rising demand, especially on the other side of 2024, where the copper deficit is going to rise rapidly from there. And that's going to push the price into the 11,000 to 15,000 position, higher than we've ever seen before. And you've already got repositioned companies like, for example, ZCCM, who are now receiving about 3% royalty now on these deals. So think about that. Now you've also got a lot more capacity for investment in your copper area, because a lot of the companies that wanted to do investment were holding that capital back because they were worried about the situation. Now you've got a flow of capital that can also go into some of these areas as well. Okay. So yes, a debt restructure opens you up for a lot more activity that's going to happen, a lot more investment. Now, a lot of these mining companies are holding back. Now, I know some people have pointed and said, well, the price looks like it's going to be great, but the mining companies are underproducing. Yes, because they're waiting for the EV takeoff. Think about it this way. If you are selling tomatoes, would you sell it at the current price, knowing that there's a higher price on the way? And especially if, and I'm just going to throw in this if tomatoes were not perishable. Okay, if you were selling a non-perishable and you knew that in the next 2 years the price is probably going to be 2 times what it is, you'd hold back supply for the meantime until you can get a more profitable price. So why start yanking things out, making minimum profits, when you can start yanking it out, making huge profits later on? So that is the bigger conversation that's happening now. So that's why there's a lot of capital investment, exploration investment. There's a lot happening now. So they're sowing the seeds now for what they're trying to do. Now, that is one of the things you'll find. The copper story is going to be a big one. Copper stocks, copper related industries, they're going to end up thriving, especially from 2025 upwards. The other thing that's also going to help Zambia maintain the strength of its currency is also the fact that we're going to slow down on fertilizer imports. Remember that one of our biggest imports in this country, about $250 million, has been fertilizer. In fact, it's probably even higher now. And fertilizer has been right up there, right behind oil. So with fertilizer expected to be produced locally, that is going to drive down the costs and also drive down the use of FX to purchase fertilizer. In fact, we're going to be fertilizer self-sufficient by 2025 as they finish off investments in the Chilanga plant. So remember, that also now takes off pressure from your currency. The third thing you have to bear in mind, especially after 2025, especially 2026 going to 2029, is the investments that have been occurring in the oil sector. Now, remember that we're working with Angola to try and get that refinery out in 2026. And as these investments being done in the Lobito corridor, that will eventually open up the flow of oil that can go from Lobito to Kolwezi, Kolwezi to Solwezi, that ends up creating that line into Zambia. That is what the anticipation is. And that also slows that down. Remember that Angolan oil is about 25, is about a third cheaper than Zambian oil right now. We're talking about market price. Angolan market price is already a third cheaper. So that's already one other big thing. Then we're working on the pipeline between Zambia and Namibia that's going to come across, which is being done by private investment groups, and that'll be done by 2029. So you got another petroleum project that's also at work, working between 2026 and 2029. And the third factor that's also working between 2026 and 2029 is also that peak oil demand is going to be reached in the next few years. And we're going to be expecting that the oil surpluses are going to shrink until 2028, when we're going to have too much oil surplus. So the oil deficits are going to shrink, and then we're going to have too much of an oil surplus. And as a result, global prices coming down, structural costs of bringing oil into Zambia coming down, dollar demand for oil starts to come down. So this is the factors that are playing here. So over the next, from 2025 going onwards, you have less pressure on the currency, less imports of fertilizer, lower costs of oil bringing into the country, and more demand for copper with higher prices. So dollar inflows are going to offset a lot of the dollar outflows in the second half of this decade. Unlike what's happening in the first half here, where we had a situation with copper down, oil up, and problems with fertilizer. These were the issues that were signaling that. And we had debt also making that. Now we've restructured the debt, so the outflow of dollars will slow down from debt, fertilizer, and oil, while we're going to have a pickup in the inflow of dollars coming in. So that should already wire your mind to already show you that there is a growth story, an industrially driven growth story. And that is very different even from 2003 onwards, when President Mwanawasa had that boom that took off. Okay, so I want to quickly replay what happened to you in statistics from that last debt deal. So this is what I call the first wealth expansion that Zambia experienced from the first from that. Now, this is data from Credit Suisse, Credit Suisse's wealth report, which shows that Zambia experienced a 1,192% wealth expansion during this time. We're talking about an almost 10x wealth expansion between 2004 and 2013. 2004, obviously the year before we got the actual debt relief, and then 2013 was kind of where the economy peaked out. So this is how it shows you the actual level of wealth growth, the full stock of wealth in this country grew from $2 billion to $22 billion in that time. Now, since 2012 to now, we've only seen the wealth of this country grow from $22 billion to $26 billion. In fact, it's even dipped below that multiple times. But we saw rapid expansions of wealth. Okay, take a look at this. But the problem that happened was because of ignorance, because of lack of participation, because of financial illiteracy. Many Zambians did not have their money in the stock market. They did not have their money in assets. They did not build adequate businesses. They were not invested in the economy. And when the economy took off, it benefited those who had invested in it. So now it is time for the people to ask themselves a question. As these restructurings now get towards the end, where are you positioning yourself? How much of your savings are sitting actively in the economy? Those who have been actively participating in bond auctions, building up their capital, will have the firepower to be able to now go into the stock market safely because they've built the base. The people who were diligent in these quiet years are the ones who are going to benefit going forward. So I'm just telling you, this is what's going to end up happening. So the rapid growth of wealth is the main thing that really took off over in this period, and this is what we're set up for again. So this is in billions of dollars. We saw wealth expand from $2.21 billion in 2004 to $22.54 billion in that period. So this should explain to you what kind of wealth takeoff you're going to expect to see at this point. Even in terms of the all share index of the stock exchange, we saw it move up by 592% during the same period, going from 2004 all the way up to 2020, 2004 all the way up to 2013. We saw the stock market go from a 766 rate in terms of the index, all the way up to 5,300. So this was about a 7x growth of the stock market just in this period as well. So this is what experience teaches us about this. And one of the things that triggers this off is you start to see interest rates drop. Because interest rates drop, what happens is, because your capital easily flows in, and I want to open your mind up to this. During this period of the debt restructuring, we saw government bond yields drop drastically because inflation finally came down. The currency finally got into control. Inflation got into single digits. The currency got into control. Then all of a sudden, debt security started to be purchased as well. Now remember, government securities were always trading above inflation, but they continued to do so. Then what you started to see is that there was lower lending rates that could go towards business activity, and that spurred a lot of the economic growth from the stock markets. Profits, there was listings that were going on. There was a huge boom that took place. Now, obviously, these are not guarantees, but the conditions are similar. And in fact, there's a lot more positivity. Now, remember what also drove this 2003 to 2013, 2004 to 2013 expansion was that China was also building cities like no man's business. So they were busy actually acquiring a lot of commodities, things like copper, anything they could, because they were building out and they were doing a lot of infrastructural development. Now, similar to the Chinese infrastructural development will be the global green transition plus the EV transition. These two things will act the same. So that is the level of growth capacity that we're seeing that is able to now start building out. Now, we learned our lesson from not participating. One of the reasons why this got messed up, and you can see how the stock market has wobbled horribly since 2014, but has now managed to rebound. And it's off that base that it can actually pick up because the growth story of the economy can do the same. Now, let's also take a look at the GDP as well, which is the backbone of economic growth. So we saw the GDP during this period of 2004 all the way up to 2014. And I'm going to capture that one. All the way up to 2014, rise about fourfold. It moved from $6.2 billion, and this is just GDP in dollars at the current rate, rose all the way up to $28 billion. You had this level of growth in your economy. Okay. So this level of economic growth, this level of expansion, everything happening together, when you have this level of broad-based expansion, it speaks very strong for the economic growth story of your country. Okay, so this is what we're trying to say. Now, where are we positioning ourselves as people? And that's why I really wanted to dive deep into this story today before we get into the future talk. Now, I say this with the greatest love and adoration for our people, but there is something you need to understand about benefiting from economic growth, because a lot of people always say, but this stuff doesn't benefit. It doesn't benefit because it only benefits participants. There is a law woven into this world that says you reap what you sow. Okay, that is a law. Okay, you cannot reap wealth if you are sowing poverty. That is something that we all have to click into our minds. So, if we want to reap the wealth of what is going to happen over the next decade or two to this country and the wealth expansion that is probably going to follow, and I say it again, we are on the cusp of the greatest wealth expansion in the history of this country. That doesn't mean you're going to become wealthy overnight, over a period of time. And these next 10 years are going to differentiate between the winners and the whiners, the people who actually went in, cleaned their habits up, and decided to actually start sowing into the economy. And I'm going to just quickly get into a thought. And I want to share a clip I shared earlier by Dave Ramsey, where he says it up front about mindsets and what happens in terms of reaping what you sow. So hear this out.
That are there mindsets that keep you in the gutter? Yes. But actual economic activity is around here for you to participate in and has cause and effect and get out of there. What you plant is what grows. If you plant nothing, the government's not going to come along and plant something. When it rains, you're going to have mud. And you can eat mud pies and make a mud hut. But if you plant corn, you'll have corn. Voila, when it rains. And don't be shocked that corn grows if you plant corn. If you do rich people habits with money and have rich people mindsets with money, eventually you will be rich people. If you do poor people stuff with money and you're rich, eventually you will be poor people. Have you ever seen a trust fund baby do stupid stuff? Have you ever seen somebody win the lottery and lose everything? They do poor people stuff with their money, short-term thinking, and they get stupid and they lose their money. I've done both. I know how it feels.
Okay, so I wanted to put that out there for as many people, and tell me your thoughts on that. For as many people to recognize when you are in a situation like this, you have a choice to do two things. You can do rich people things, or we can do poor people things. Okay, and I'm being honest. And in this same speech, he actually said there's a difference between poor and broke. He said broke is a lack of money circumstantially and just for a situation. Poor is a way of thinking. Okay, so we can choose as a country now, and individuals at individual level, you can choose now. You can choose to do rich people things, you can choose to do poor people things. During this period as well, what we also saw was the greatest wealth expansion of salaries. The average salary in Zambia went up 4x during this period in real terms, not even just in terms of nominal terms, in real terms. So, because of the growth of economic activity, wages and wages opportunities started to go up, and therefore it started to lift as many people out of the economy. Now, if you are not improving your career prospects, if you're not improving your skills, if you're not investing in your capabilities, if you're not investing in the right skills, how do you expect to benefit from the rising salaries that are expected to come from higher economic activity? You will not. Okay, that is the reality. So, whichever side of this equation you're sitting from, in terms of your retirement planning, your wealth planning, your business planning, your career planning, whatever it is you're looking at as to how to expand your wealth and your horizons of your wealth and your family's wealth, you have a choice. If you reap the rich habits now and you start to continue to build them into the next phases of our economy, then you will most likely benefit from that. But if you sow the rich habits and rich behaviors of saving, investing, and here's what I would advise as many people: when things are going good, this is the time to be prudent. This is not the time to go boiling out of control. This is where the problem happens. Because when the economy is good, salaries start to rise, things are going good. Where do we find you people? In the club. That is where the problem starts to happen. There are many people who get found in those areas, and the number of people who are having Saturday nights starts to rise and rise and rise. But when the bad time happens, those same people who are having their Fridays and Saturday nights hit the street, start saying, these things need to get better. But because you were not prudent during the good times. So you build the excesses and be prudent in the good times. Make your investments in the good times, because then in the bad times, you will be able to have capacity, firepower to buy assets cheap, to live better than a lot of people. There is a lot that happens to people who benefit. Now, this cycle passes. Now, I say this because I'm going to tell you, and I said I'm going to drift a bit before I get back into the main stories of today, is that I think in the Bible, in the book of Genesis 8:22, God says to Noah, he says, I will not strike the earth anymore. He said, I won't curse the earth anymore. But I know that the heart of man is evil. Then he says, so as long as the earth shall stand, there shall be seed time and there shall be harvest. There shall be summer, winter, hot and cold, and they shall be day and night. And those three things they're three laws that are put into the earth, because God doesn't want to punish people anymore. So he's created a system. He actually programs into the earth a system that will punish you for foolish behavior. So the first thing he says is there's seed time and there's harvest. So basically what he's trying to say is whatever you plant is what you will harvest. So if we as people in this time, and I'm stressing this right now because I know what happens at the end of a wealth expansion cycle. A lot of people feel disenfranchised because they were too ignorant and they weren't educated enough, or they weren't disciplined enough to participate. They were not disciplined. And then they start complaining, and then they start bringing in socialists who then wreck the economy. And then they start saying, we need to bring back the professionals. And thus the country goes into this professionalism, populism cycle where we never grow at all. So we as a group of people have to start making sure that woven into the earth, we respect the Genesis 8:22 law that basically says there is seed time and harvest. So if we all want to harvest wealth expansion, can we please make sure that we are planting wealth seeds? Okay. And I'm not talking about the papa seeds. I'm talking about actual planting wealth seeds of habits and behaviors, the saving, the investing, the getting financially literate, the building businesses up slowly, the building sales slowly, finding product market fit for problems in society. These are the wealth habits. Okay, these are the wealth behaviors, becoming better at sales, picking up books on sales and learning how to sell. Okay, these are wealth habits. Okay, how many of us are practicing these things now so that when the tide rises, we are the recipients of the rising tide instead of the people who are just watching it? Okay, you are only the recipient if you are participant. So that is number one. But part of the codes of the earth that God put is there will be seasons. So there will be a high season that will come, but that high season will come to an end. And if you didn't plant at the beginning of the season, that's like waiting for full floods and rain to start. And that's when you start planting your maize. You haven't planted before it's time for it to plant. You went and planted at the end of maize planting season. And then you start saying, but my harvest was poor because you did not understand the seasons. This is the rising season. So when the rising season happens, it means you really, really have to prep yourself. And there have been people who have been diligent about investing and building up capital for the last couple of years to do that. And the third thing that was put in there is there will be day and night. So there are cycles to life and the time will pass. This period will pass. Okay, this opportunity will pass. And if you are not invested in the economy and you are not invested in some way participating in the economy, not sowing the right seeds, then God has orchestrated a system that will punish you for that. And I'm just being serious about that. So, should you get into your mentality of we're just going to debate this politically all the time will pass, the cycle will change, and you will be frustrated in exactly where you are right now in 10 years' time. So ask yourself the simple question: where do you want to be in 10 years? Where do you want to be in 20 years? It is what we are going to do now as Zambians by ways of entrepreneurship, by ways of career development, by ways of managing money that is going to determine the wealth position we shall start to see in 10 to 20 years. We're not going to see it overnight, but in 20 to 20 years, we shall see the difference. So the question that's why I'm saying we are on the cusp of a great wealth expansion. I've been saying this for multiple years. Which side of this story do you want to be in? Comment down below. Comment down below to give me your thoughts on that one. Which side of this wealth story do you want to be in? And I think we've gotten one so far before we get into the rest of the news. This is the information. I choose the rich people way of doing things. I appreciate the spiritual backing of your teaching. Thank you very much, Chitu. Now let's get into thank you very much, Chitu. Let's get into the rest of the stories that are actually coming in today. We did get news from cross-border traders that FX volatility has actually troubled them. So this is actually where the inflation might start coming in a little bit. And the situation has put pressure on traders as they found it difficult to determine the value of their capital. Remember that they go across, they grab some money and they try and buy things from South Africa, come back in to try and make an investment, and that often hinders them. So it does create an imperfect market for cross-border traders. Other news that did come in yesterday is the Bank of England delivered a hefty rate hike. So there has been significant news that the news suggesting the British inflation would take longer to fall. So remember that core inflation in England has actually been pushing up. So traders scrambled to price in a peak UK rate of as much as 6% and its implications of risk of recession and the rate sensitive stocks that like banks and home builders did slide yesterday. So we are still seeing some problems in some major. So this is where there's a little bit of that there's going to be a little bit of a delay when the rate hiking cycle also slows down in some of these developed countries for capital to flow freely, but we're already starting to see the open flow of capital. Oil plunged yesterday by 4% as interest rate hikes outweighed lower US supplies. So we actually did see that the Bank of England raising its interest rate was very strong. And also an executive at a shale producing company, EOG Resources, said that oil prices could rise as muted increase in US production cuts in OPEC producers. So there's still that intermediate oil price hike that is expected coming down the line. Other news that came in yesterday for our crypto traders: Bitcoin cleared $30,000 for the first time since April as spot ETFs race heats up. There was a surge of 14% over the last 3 days of Bitcoin trading. Obviously, renewed interest as BlackRock applied for an ETF, and also Coinbase was also offering custody services to BlackRock. That's why you're seeing your crypto portfolio moving up. So it's a lot of speculation, but there is QCP Capital said BlackRock spot ETF nod is unlikely in the near term. However, the Winklevoss brothers have also said that we're in a stage of the great accumulation of Bitcoin, and they're pointing at Deutsche Bank offering custody services, BlackRock trying to get into ETF space. So this is part of the news there as well. Remember that we always advise with crypto assets and wealth, what we call wealth insurance assets. Always keep it to about 15% maximum of your gold, dollars, and cryptocurrency all together, to make sure that you're not caught up in the huge volatility. These are wildly untested assets, but they are part of the future of the finance story. Now, let's get into our major conversation of the day. Thank you very much for everyone who's with me. And let's get into our topic of discussion. So, our topic of discussion today has to do with investments in the world of solar and wind and also renewable energy. And this is going to be a big story because renewable energy is also going to be a big way that capital will flow into Zambia as well. Trying to get a lot of renewable electricity and renewable energy. Remember that $8 billion has already been pledged in investment in this country, specifically for renewable energy projects. So it shows you that one of the biggest FDI inflows outside of mining will be green energy. That's going to be one of the biggest parts of it as well. So take a look also at this chart, which is showing where we're getting deals from. Is it businesses investing directly, or is it assets? In other words, people are securitizing it, and also the deal count and the average deal size. This is happening around the world in terms of in millions of dollars. We're starting to see deal flows coming in, but it did slow down, especially in 2021, and it's starting to pick up. And corporates are the ones who are now doing a lot of the legwork in terms of investing in green energy. The other chart I wanted to show you was where does Zambia stand in terms of our green energy mix, and you can see that we're still quite low in terms of our green energy mix. Thermal has actually risen to about 11%, and our hydro is still sitting about 84. So where are we going to be standing? That's going to be a big part of the conversation. So today in our figure it out section, here's the number I want you to keep into your mind: 600 million. Africans still do not have access to electricity, giving Africa the lowest electrification rate. And Africans make up 77% of the world's population who do not have electricity. Africans make up 77% of the world's population that does not have electricity, according to the Energy Progress Report. Other data that the Energy Progress Report did say, as another number I want you to figure out, is that $31.4 billion of electricity investment has to be done per year to achieve electrification for all Africans, all sub-Saharan Africans by 2030. For context, only $5 billion was raised in 2017. So that already tells you there's a demand for it. And with these COP27, 26, COP Chakuti, all telling us that Western nations all have to pony up $100 billion a year to make sure that African transitions are helping. Also, Africa is not just investing only in fossil fuels, but with green energy. Then that'll also mean that this can be met through green capital raising. So you see what I mean? The need is there for $31.4 billion a year to come into Africa. So also the other thing where flows of capital will start coming in to countries like Zambia is through this mechanism as well. But one of the problems we are struggling with in Zambia and Africa specifically is the lack of engineers. This number is the third number I want to keep in your head: 1 per 10,000. According to the World Bank, this is the average number of engineers per 10,000 people in the African populations as per country. Now, just for context, most industrial nations have got 20 to 50 engineers per 10,000 people. So our skill sets are really poor. That's where the problems are starting to come down. We have weak skill sets at the moment for us to be able to actually actualize a lot of this energy capacity growth. So that's something I want us all to be paying attention to. So on our topic of discussion today, we'll be talking about the future of green energy. Now, at the Bloomberg New Economy Summit for Gateway Africa, there was a panel called Realizing Africa's Clean Energy Potential. So here's some of the topics, and here's some of the things that you should see. Which countries have got current installed, which regions of Africa have the best installed capacity? As you can see, Southern Africa has the best installed capacity. We've got a lot of hydropower here, and we've got currently under construction, but East Africa is rapidly working on bigger levels of construction. North Africa, no construction is being done. West Africa is trying to match it as well. But the competition right now to improve renewable energy in Africa is happening in Southern and East Africa, meaning a lot of the capital for renewable energy is probably going to flow through Southern and East Africa. So that just shows you this is where capital flows are likely to come through. Now, the main issues that were being discussed on this panel was a lack of investment in Africa's grids, financial hurdles, the role of fossil fuel in transitions, decentralized solution, the grid stress, risk adjusted returns, and corporate finance versus securitized finance. And I just want to go through these points for you so that you understand what the future of green energy is. And think about companies, by the way, like Copperbelt Energy Corporation. These are the things they're going to have to go through. Think about Zesco grid expansion. These are the things they're going to have to go through. And think about the investment opportunities in the renewable space. So the first thing that they pointed out was the lack of investment in the grid. The African green energy potential is there, but there has been a lack of bankable pipeline projects in green investments that actually make it. And the problem is grid investment across the world is going down. But unfortunately, Africa is getting the brunt of it. We're like the worst invested in place. And the problem also is that last mile. In other words, getting that last connection to the house, to the home. So you create the station, but then the transmission has been a huge problem for Africa as well. So transmission investment is also pretty poor. So there is the consideration for what they call decentralized solutions of mini grids. Morocco has been doing that as well. And I'll be talking about that as well to also help people look at what other solutions, what are the opportunities you should be looking at, especially if you are in the energy space as a person. If that's your business line or that's your investment line or things that you're interested in, this is where you should be opening your mind. And also, if you're looking on what to study at school, it shows you these are the trends that you should be looking at. Now, grid strength and stress is that the grid is a serious impediment. For example, they did give the example of Morocco, which needs about $1 to $2 billion a year of grid reinforcement. Africa, as I pointed out, needs about 31.4 billion for grid expansion. So the grid needs consistent care. We also are behind in terms of electrification, and Africans are the most vulnerable to grid problems. Plus, but the biggest problem that a lot of people are facing is risk-adjusted returns on investment, because a lot of this, and I'm also going to signal what it's going to mean for your electricity prices. So plan yourself, because if you're going to start obtaining investment, it also is going to speak to rising electricity prices for a specific reason. Okay, just ask yourself these questions. So this is why you have to focus on income growth more than just defending against inflation. You need to focus on income growth. Now, there are financial hurdles to the green energy solutions. Also, the environment that we've been providing for institutional investors, they've not been comfortable with what they've been seeing, and the mobilization of capital has been difficult. So there is the use of what they call blended finance solutions to de-risk it. In other words, some of the governments, such as Germany and to some point the UK, have actually stated that certain investments in countries in frontier markets like Africa, if you make those investments and you make a loss, you can recoup half of it in taxes. So in other words, you can write off half of your losses in taxes, especially if you're doing startup investments in certain areas. For example, the UK has done that as well. So generally, there are some goals. In Germany, you did see the German government back some of these renewable energy funds to make sure that if there are any losses, the German government has backed it and is supporting it. In other words, they can actually de-risk the funds. That allows a lot more institutional capital to freely flow into Africa. So it requires conversations between our presidents and these nations to start saying, can you de-risk some of your institutional capital to come into Africa using these blended finance solutions? What they've also pointed out is that there is the need to de-risk. And what does that mean? These institutional funds and investors need to see visibility on their ability to make a profit. They need certainty on tariffs. If you are going to ask someone to make an investment in a power station, you cannot have the people of this country hit the streets and then start saying, we want the power prices lower. And then you vote in a radical who pushes the power prices lower, and then that company goes and makes a loss. They don't want that. So they want certainty on tariffs. These are the issues that they're all going to be looking at. If it was your money, you'd ask for the same things too. You wouldn't want people. How many people have lost money in the tomato industry where the tomato price has dropped rapidly, and that's at least by market forces, by the time they have harvested their crop? Dumisani Ngube even talks about that story. Also, the regulatory framework needs to be clear and simple so that people understand how their investments can go on, and also off-taker arrangements and right sizing of demand. This is what they're looking at in terms of the hurdles to obtaining finance. These are the things we need to work on drastically. And the other thing also is risk adjusted returns. We do not have the adequate risk adjusted returns because there is a perception of risk in Africa. So PPPs need good risk adjusted returns. It's not just about getting people to invest, they want to make money. Everyone wants to make money off their money. So you can't ask people to not make money off their money. They're not going to do that. Okay, so they want to see what is their path to profitability, and therefore they need to see risk adjusted returns, returns on investment commensurate. This is why even the cost of electricity, the tariff rates, have to be clear and they need to be profitable to them. For them to put their dollars into your grid, they need to see profitable tariffs. The prices need to be at equilibrium, not so high that they defeat the goal of giving Africans electricity, but not so low that they actually deter the investor from actually putting in the money into your grid. So you have to reach a middle point. So everyone has to understand that the days of expecting electricity prices to come down are not there. Okay, I'm sorry, that's not going to happen. Because if you're going to get investment into your grid, they're going to expect the right price. So what you are going to have to do in your budget is start working on increasing your revenue. You have to be revenue minded because at this point, we're going to be using a more private model for this. They also want to limit risk and keep the prices of electricity profitable. So they also demand cooperation. This is what they need when they want risk adjusted returns. So these are the financial hurdles that are faced in your grid. Now, if you want to end load shedding, take a look at what caused load shedding. No grid investment for a decade and a growing demand. Tens of thousands of people, 50,000 households connecting to the grid every single year, zero investment. Okay, what did you think was going to happen? Obviously, load shedding was going to happen. So the choice is for the next 10 years, we are going to have to stomach tariffs that are a bit more elevated, or else we're going to have a grid that's not going to get invested in. That's your options. Okay, because there are no roving philanthropists coming around just dropping money for your grid. That's not happening. But they will try and make sure that they can balance between increasing expansion to electricity, access to electricity, while also making it profitable for those. Other financial hurdles also have to do with project and corporate finance, but it still comes up to the fact that hiking interest rates have also made it very difficult to affect attractive electricity prices. So in other words, the higher interest rates have made the cost of capital more expensive, and therefore it'll reflect in higher tariffs that are needed. So regulating entities still have hard conditions to allow capitals to flow, and they also lack test cases. So a lot of the investors out there are saying, what are the ground level test cases of these investments? So obviously, in terms of green energy investments that could be happening in Zambia, this is why I said Copperbelt Energy is probably the most likely. They have built a solar park, so they're the most likely to attract capital for things like that. In the system because they've got some test cases under them. So this is why there's a bullish outlook on that stock because of conversations like this. Other conversations that we also need to be looking at as well is blended finance obviously needs to create standard vehicles. Now, there is a role for fossil fuels to be playing in the transition of electricity. And that also is that there's a need for oil and gas. For countries that have oil and gas like Angola to be able to sell those things, to be able to do that, to raise finance to support their transitions. So even developed nations that are struggling with wind and solar as well, they're also saying, look, you cannot do away with oil and gas instantly. So, and there's also climate change issues and hydro. Plus, we also have to remember that sometimes oil and gas and coal also do allow for affordability. So Africans also have to battle between power affordability and power access. These are two difficult things for us all. So that is part of what is being worked on here. So fossil fuels will probably still have to play a role in the transition of Africa to green. You can't just cut fossil and then tell people no fossil, you're going straight to green. And one of the main conversation points, which I want to park on here before we go, is decentralized solutions. 80% of Africans are best served by decentralized solutions. What are those? The rural electrification solutions, mini grids. This was why it was a very good story to hear that 1 million kwacha out of every CDF is going to a RIA project now. So rural electrification is going to be working in every constituency with a million kwacha budget to at least create mini grids and power systems there. So decentralized grid solutions, home solar solutions. I've talked about what we need to also create green bond vehicles in order to create home solar solutions to grow people to be able to go off the grid. So as the price of electricity rises, we need to be able to push people off the grid who can afford to go off the grid and also do that. But the problem right now, the biggest obstacle, is the cost of these things like solar panels and the cost of accessing the finance for it. That's where the biggest hurdles are coming. So a debt being written off with lower interest rates can then hopefully, plus your central bank is working on green financing frameworks to help banks deliver lower capital loans or lower interest loans to people who want to retrofit their houses with solar, to people who want to invest in solar infrastructure for themselves. That is hopefully something that will help. But there is currently, of course, in this summit, they did talk about the need for off-grid subsidies to try and help the solution. I'm not sure if that's viable at the moment. So decentralized solutions they are currently more effective, but are they more attractive? That's the conversation that they're having. And it's hard for institutional capital across the world to finance off-grid solutions without some sort of central thing. So that's why raising green bonds in Zambia may be the option to help with off-grid solutions and mini and decentralized solutions. But the future of electricity in Zambia is decentralized solutions. Rural electrification is your number one route to getting to a lot of people, to getting electricity access. But there should be political will, and that's why such a move like last time was very important. And that's the roundup that I've given. And I know that we really ran into the rest of the day here, but I say this again to as many people as possible. You will reap what you plant. So that is my final thought here. You will reap what you plant. The cycle will come to a downside, and when the cycle does end for whatever reason, unfortunately, if you have not planted the rich people habits of this period, that's not going to happen. Now, Chufia, you've asked it, when are bond interest rates likely to start decreasing? Well, there is a little bit of a backlog. Offshore investors are first going to buy up the bonds that are sitting on bank books right now. So that's the backlog that needs to happen. Then they're going to create excess demand within those banks. Then that'll eventually start pushing the interest rates down. That'll probably be what they'll do, because if I'm an offshore investor and I've been told I can't participate in an auction, what I'll just simply do is deposit the money in the bank that I know has my nominee account, and then I will speak to that bank and say, go and buy the bonds for me, and then I'll buy it next week. But they first have to start with the backlog of wiping out, of rolling down those banks' backlogs. So banks have got huge positions of government bonds right now, which probably need some downselling, especially the 15-year and the 10-year bonds. Those are huge positions. And then after that, those need to get rolled. Those probably will be purchased. And then following that, we will see that interest rates may start to come down later. The goal, I'll tell as many of you, is always be buying. If you're in an asset buying season, when things are going good, buy assets. Buy them as much as you can. This is the period to buy. You've got to be buying before the tide rises, and continue to just keep buying through it. The habit is more important than the timing. Time in the market is better than timing the market. And I will leave that there to everyone. Thank you to everybody who has joined me. I know we've had quite a big session today. Big news has come out. But I say it again. If you do rich people things with money, you'll be rich people. We do poor people things. After this decade or the next decade, we'll be poor people still. So it's up to us. Everyone, I wish you well. Have a wonderful day.